Hey everyone, welcome back to Corporate Decoder. Today, PM International just filed a current report, and I'm seeing a key leadership event that matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. We have a significant executive transition happening, and it is tied to a special separation agreement that is pretty common for these large companies. So Philip Morris International Incorporated, or PM International as you know it, has filed this current report with the SEC. The earliest event reported is the 6th of July 2026. The main story here revolves around a C-suite change. This filing details the departure of Emmanuel Babeau from his role as Group Chief Financial Officer. He is transitioning to a new position as Strategic Advisor to the Group Chief Executive Officer. This isn't a sudden exit though. It was announced back in May of 2026 that Massimo Andolina, who is currently the president of the Europe region, would be taking over as Group Chief Financial Officer effective the 1st of August 2026. So this report is essentially formalizing the wind down of Mr. Babeau's tenure and detailing the terms of his separation. The core of this filing is the separation agreement and release that Mr. Babeau entered into on the 6th of July 2026. He will continue to receive his current base salary, which is quite substantial, around $1.56 million annually, while he serves as an advisor until his separation date, which is the 31st of March 2027. He'll also be eligible for his 2026 annual cash incentive bonus, targeted at 125% of his base salary, provided he stays with the company through that separation date. What is interesting here is how equity awards are handled. He'll be eligible for the restricted share unit portion of his 2027 equity award, not the performance share unit portion. This is conditional on board approval and him remaining employed through his separation date, if approved. These asks would represent 40% of the total 2027 equity award he would normally be eligible for. This suggests a partial reward for his service, even as he steps down from the CFO role. Beyond his continued salary and bonus, Mr. Babeau will receive post-employment benefits as if he were terminated without cause. This includes a lump sum severance payment equal to his current base salary, which is again around $1.56 million. He'll also get a pro rated payment of about $488,000 in lieu of his 2027 annual cash incentive award, covering the period up to his separation date. Furthermore, his outstanding equity awards will fully vest. This is a pretty standard package for senior executives exiting these large corporations, offering a financial cushion and rewarding their long-term commitment. It is worth noting that the original employment agreement terms that are being applied here were filed with the SECSWay back in March of 2020. This means the company is adhering to the terms laid out in that original contract. In exchange for these generous payments and benefits, the separation agreement includes a 24-month non-competition clause. This is critical. It means Mr. Babeau cannot go and work for a direct competitor of Philip Morris International for 2 full years after his departure. This is designed to protect the company's proprietary information and competitive edge. He also agrees to customary confidentiality and non-disparagement clauses, and he provides a general release of claims against the company. It all hinges on his continued employment through the separation date and his adherence to all the terms. Now, looking at the exhibits, this filing formally includes the separation agreement and releases Exhibit 10.1. This is the document that contains all the specifics of Mr. Babeau's departure package. Now, what does this all mean for Philip Morris International Incorporated? PM International is a giant in the consumer defensive sector with a market cap hovering around $283 billion. Their stock has seen some movement lately, with analysts at UBS raising their price target earlier this week. But there has also been some mixed sentiment with other reports suggesting it might not be a strong buy right now. This CFO transition appears to be a well-managed, planned succession rather than a sudden crisis. The terms of Mr. Babeau's exit are very lucrative for him, which is common for executives at this level. The company is essentially paying a premium to ensure a smooth transition and to secure non-competition protections from an operational standpoint. The continued employment as a strategic advisor and the partial vesting of equity awards suggest a desire for continuity and leveraging his experience in the interim. The risk here is always in the execution. Can the new CFO step in seamlessly? Will the transition to advisory role for Mr. Babeau be productive? The non-competition clause is vital to protect PM International's strategic interests. From a shareholder perspective, a well-executed leadership transition is usually a positive sign, signaling stability and foresight. However, the substantial payouts associated with these executive departures are a cost that will impact short-term earnings, though they are generally considered a necessary investment in retaining and transitioning top talent. The biggest concern I see is not the departure itself, but the ongoing costs associated with these high-level executive agreements. While necessary, these can add up. What I am truly watching for is how the new CFO, Massimo Andolina, drives financial strategy and innovation as PM International continues to navigate the evolving landscape of the tobacco and nicotine products industry. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives.